From the opinion pages of the Wall Street Journal, this is Potomac Watch.
The U.S. economy shrank again in the second quarter of 2022, meaning it is now 1.25% smaller than it was at the end of 2021. The White House says, please don't call this a recession. But then what is it? Plus, Joe Manchin and Chuck Schumer agree to a new tax and climate and healthcare spending bill worth something like $740 billion. We'll tell you what's in it and how Senate Republicans appear to have been played by the Democrats. Welcome. I'm Paul Gigot of the Wall Street Journal. Editorial page with my colleagues, Kimberly Strassel. Hey, Kim.
Hi, Paul.
And Alicia Finley. How are you, Alicia?
Good, thanks, Paul.
All right, let's first talk about the economy. Down by 0.9% in the second quarter after a negative 1.6% in the second, adding up to about 1.25% for the first half. That's the traditional definition of a recession, 2 down quarters, the way most people understand it. But the White House was out front this week saying, please, please, please don't call it a recession because it's the National Bureau of Economic Research that determines officially or semi-officially when there is a recession. And of course, NBER often does that well after the fact. So most of us look at actually what the Bureau of Economic Analysis reports in the Commerce Department. And that 2 down quarters traditionally meant a recession. But let's listen to Jerome Powell, chairman of the Federal Reserve, on Wednesday respond on the recession question.
I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing. But if you look at the labor market, you've got growth, I think, payroll jobs averaging 450,000 per month. That's a remarkably strong level for this state of affairs. The unemployment rate at near a 50-year low at 3.6%. All of the wage measures that we track are running very strong. So this is a very strong labor market, and it's just not consistent with 2.7 million people hired in the first half of the year. It doesn't make sense that the economy would be in recession with this kind of thing happening. So I don't think the U.S. economy is in recession right now.
So Jerome Powell giving some backing to the White House review on this, citing mainly the labor market. Okay, so we're not going to fight over recession, yes or no. A lot of that's political definitions. I think the right word here, as I look at the data, is stagflation. Slow growth with rapidly rising prices. 7.1% increase in inflation in the personal consumption expenditure in the first half. That's the Fed's favorite measure. Its target for that is 2%. So inflation is more than 3 times higher than its target. And you see that inflation weighing on consumers as consumer spending fell in the second quarter, not negative, but fell off from previous quarters. And a big fall off in business investment. Alicia, how do you look at the numbers and interpret them?
Well, I think some of this wasn't exactly surprising. You saw a big fall off, in particular in residential investment, housing. We've already been hearing about housing starts have been slowing down in part due to rising interest rates. You also see a big fall off in what the DEA deems structures. So that could be factories and such. And that is a little surprising just how steep of a fall off that was. And I would attribute that to the economic uncertainty, both the policy uncertainty and worries that we may be headed into a recession. And so businesses are starting to pull back on investments. One other thing that really jumped out at me from reading or looking at the bottom line numbers here was actually also in the consumer spending category, a pretty big drop in spending on food, which is we're hearing about how food prices, protein in particular, meat, have been increasing. So it does suggest that consumers are pulling back there, maybe substituting some items, maybe buying lower cost, lower price products to deal with the inflationary environment.
Consumer spending in the fourth quarter, 2.5% increase. First quarter, 1.8%. The second quarter, 1%, a measly 1%. Now, what that tells me is that consumers are spending more to fill up the gas tank. They're having to spend more, they know, on staples, including food. So they're just not doing as much spending overall. They're beginning to pull in some of their marginal or expenditures, things that are discretionary. And that's weighing on economic growth since consumer spending is the biggest determiner of GDP. Kim, you have any insight on the business investment side, which has really fallen off?
Yeah. So one further thing on the consumer side, it was interesting. If you look at the numbers, the purchases of goods outright, that declined. So to the extent that it was still positive, it was because spending on services grew, although grew only moderately. And there's a lot of suggestion out there that that is in turn because of middle income or higher income Americans who really doubled down with some of that money they had saved up on vacations. That was what kept us afloat. But that's a waning number. It's going down. And so that's not going to continue to last. On the business side, look, I think you see a number of things. Inventories are rising, and businesses added some to them in the second quarter, but much more slowly than the first because they are seeing that decline in consumer spending, and they're worried that they're not going to be able to shift these items out of warehouses. So that's causing some of the pullback. I think that there is a certain expectation mentality that has also set in as well. Concerns about continued rising prices, a further drop off in consumer spending, the potentiality of being hit very hard by ongoing labor demands and having to pay more to get a hold of those workers that are too few out there in the workforce. Businesses are still struggling to get a hold of people, and so they are having to pay more. I think all of this is feeding into a business investment side that is very concerned about the future and so is not willing to do anything that counts for expansion.
Just as a political matter, obviously slow growth and rising prices not good for the party in power. But there's an added element here that I think is going to weigh on President Biden, and that is the comments by the White House just increasingly out of touch. I mean, this is a White House that said inflation was transitory. Well, it wasn't. Said times are really good for workers, President Biden said. But of course, because of inflation, real wages are falling. Now the White House goes at great pains to say, no recession. But for millions of Americans, they don't feel very good about the economy. And I think it just, Alicia, makes Biden look like he's really not connected to the real lives of Americans.
I think that's right. And this report shows that the real personal income has declined. And that's in part because of the rising inflation. And I would also just note that I think the inflation numbers, whether you consider it the BEAs or the BLS, the CPI, I think they both understate the actual inflationary impact that our lower and middle income families are experiencing, in part because I think they understate the shelter at the rent index and that they spend more of their money, their incomes on energy, which is increasing much more than perhaps some other components of the index. So this is really having a much bigger impact on the lower and middle income families that he, quote unquote, claims to be trying to advocate for. And we'll get to this a little more later with this new spending bill. He doesn't seem to understand that this is actually maybe some things are the higher income people, maybe, they can tap into their savings. I mean, stock prices are starting to fall a little bit. So you're starting to see a wealth effect or a declining wealth effect. But what's lower income people, they don't have as many savings. They're really having to scrounge and pinch right now. So whether we are in a technical recession or not, I don't think it really makes much of a difference to these people.
Okay, let's move on to Joe Manchin and Chuck Schumer, the dance of the Democratic senators. They finally agreed that a new $740 billion spending and tax outline after so much melodrama over the last 18 months or so. Will Joe do it? Will Joe not do it? Will he sign on? Who to blame? How much the Democrats want to blame him? Should he be ostracized from the party? Well, Joe Manchin, the wheeler dealer, always the classic political Paul loves doing deals. And finally, he now has signed on to this. It isn't the big BBB, Build Back Better bill that Joe Biden proposed, but it's not nothing. Let's listen to Manchin.
It was me and my staff, and then we worked with Schumer's staff. My staff was driving it. We wrote the bill. Schumer's staff would look at it, we negotiate, and we worked that through them. President Biden was not involved. President Biden was involved in the others. When we went to the BBB and everything, we knew where things were at. We used some of those parameters and all that. But I was not going to bring the president in. I didn't think it was fair to bring him in. This thing could not have happened at all. It could have absolutely gone sideways. So I had to see if we could make this work.
Kim Manchin had said when he had seemed to be perhaps putting a final end to the negotiations a few weeks back that he was going to wait until another inflation reading for the next month or two, and instead he closed it off here. What do you think happened?
The pressure. I think Joe Manchin just got tired of getting kicked. And we should have always been open to that because, as you said, he's a consummate deal maker. He's also a loyal Democrat. And in a number of his statements over the past day, he's pointed out that this was the right thing to do for his party. He adds always that it's the right thing to do for the country. I disagree profoundly. But suddenly, here we go from Joe Manchin, the thorn in the side of the entire Democratic establishment, to Joe Manchin, the coal state senator who agrees to a major climate deal and gives Democrats a win just 3 months before the election. So I'm sure he's happy with some of the headlines he's getting these days. But on the merits, a number of things that Joe Manchin said he cared about, that he wasn't going to go there, he ended up yielding on. One, he didn't wait for those inflation numbers to come out. He's also given a lot on different tax credits, for instance, for electric vehicles, which he said he wasn't going to go there. And yet on the other side, Paul, it is a little bit head scratching. He didn't really get much when it comes to fossil fuels, which he claimed all along were something that was a priority for him. And so I think that means that, it just has to come down to the pressure, because if I'm Joe Manchin in West Virginia, this is not a great deal for my state.